Hello, investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. This is a one-year daily candle chart of the Russell 2000 Index, ticker symbol RUT. And I left my lines on the chart from last week so you can see how the Russell 2000 has followed along with that forecast. And as I zoom in here, you'll see that the week before last, I said the market would pull back. It hit the target right there at the end of that diagonal line. And then last Friday, I said that the Russell 2000 would most likely rally. And I drew this diagonal line in that upward direction with the end of that line being my target. And you can see how nicely the Russell 2000 rallied right to that point, exactly, almost to the penny, and then pulled back a little bit. Now, what does that mean for next week? Well, if you look more closely, you'll see that this is a doji right there. That looks like a little cross. I'll zoom in just a little bit more so you can see that. This cross is usually found at pivot points, and it's a sign of indecision. So you can see, again, from last Friday right up until Wednesday, we rallied up. We had a bearish engulfing pattern right there. See this? It's a big red candle that engulfs the previous green-bodied candle, and then it pulled back a little bit, showing that doji. Now, this doji could very well mean that there's a pivot point now forming to the upside because it's followed by a green candle with a shadow underneath the candle and no shadow above the candle. Now, if you're new to candle charting, understand that the shadow basically highlights the high and the low of the day. So what that means is if there's no shadow above the candle, it means that the market closed right on the high. So what I think we will see for next week is continued highs on the Russell 2000. We are breaking records every single week, and it's the Trump effect. Today, Donald Trump spoke to the world leaders at the Economic Summit in Davos, Switzerland. And I'm going to tell you, he really knocked the cover off the ball. It was a home run, and it was widely accepted as a good thing for the world. And now Donald Trump, again, whether you like him or not, he's pumping optimism into the world economy, and he is driving investors and big businesses to the U.S., and that in turn will most likely continue to propel this bullish market. Now, for a long time, I've been very, very cautious and waving that caution flag and telling investors to protect their downside against the major pullback. Right now, I don't see any signs of a collapse, but I am still very defensive in the general markets, especially the broad-based indices like the Russell 2000. So now let's go to the VIX, and I'll show you what we said last week there. I said that we would most likely pull back, which we did a little bit. On Monday and Tuesday, we pulled back, but we didn't pull all the way back to fill that gap. This is a red candle with a shadow above the body, and you see the long shadows above the body. So as I erase these lines, what that means is the VIX is most likely going to continue lower to fill this gap. So I'll leave that gap in place as a target, and I'll forecast that the market or the VIX will pull back to that point before bouncing. Now, again, if you've been following along with the Market Guys long enough, you'll know that the volatility index is inversely related to the S&P. So if the VIX is considered bearish at this particular point, we'll have to go bullish on the S&P. So let's hop right to the S&P. We'll draw some lines there. The market did not pull back as I expected. It did rally in the beginning of the week, like I said, but it did not pull back. We got a red candle here, red candle on Thursday, big green candle on higher volume on the S&P. See that increase in volume as a green candle. It's telling us that the buyers are still coming in. Now I'm going to show you when I get to the diamonds, I'll show you why I'm still going to remain cautious throughout probably the first quarter of 2018. So here's my forecast for the spiders. We're probably going to go set new highs again as we start to approach February 8th, which is going to be the State of the Union address. And if Donald Trump delivers a speech at the State of the Union address like he did in Davos at the Economic Summit, we're probably going to see another big rally because not everyone saw his speech or heard his speech from the Steigenberger Hotel there in Davos. I truly believe that this is going to continue in a more vertical angle as we approach February 8th and beyond. But eventually we're going to see a pullback, and that's why we're more or less trailing our stops here. I'm not changing my tune. For those of you who have heard me talk about downside potential, I'm just being extremely cautious, and you could really check in with our subscribers. We're taking long positions, but we're doing it very cautiously with stops very close, set beneath major or key support levels. So that's the spiders. Now let's get to the Qs. Same thing. It's going to be the same story as the spiders. It did not pull back. We have a more vertical line showing right now because if you look at the fans, and I'll draw a couple of fan lines here. If I take a fan line from that low and project out from that low, you'll see that's fan line number 1. Fan line number 2 is taken from the second point of the first fan, projected out connecting those lows. Fan line number 3 is taken from the last point on fan line 2, and it's connecting these lows. There's the most vertical fan line. And let me just tell you that once a fan line breaks, or I should say once the most extreme fan line is broken, then it gravitates back down to the next fan line in the sequence. Go to themarketguys.com, look at the video on fan lines so you can get to know how those work and the principles behind those fan lines. So that's the Qs. I'm going to keep this as a track going higher, but remember, as soon as it breaks that line, it's most likely going to pull back to the second fan line in that sequence. Okay, let's go to the diamonds because I did draw some fan lines there, and they're still in place, again, from last week's report. I said if we were to break down below that fan line, we would pull back. Guess what? It's still holding that fan line, and we did not pull back. So I'm going to extend that just a little bit more because I think that the Dow will also, with the rest of the indices, continue to rally. I'm just extending that fan line right there. Remember, if you're holding any Dow stocks, if you start to see this fan line being broken, and that's acting as a support level, then trail your stop up, protect your profits, protect your cash, wait for a pullback, and then on any bounce of these fan lines, you'll be able to get back in. Well, I want to thank everyone for last Monday's open house session. We had a really good Q&A session. We had stock symbols being submitted. Yesterday, I had another good web seminar with the Scotia folks in Canada. That's through Scotia iTrade. And at 4:30, I had a web seminar with the TradeStation people who were learning about cryptocurrencies. And we talked a lot about that, all of which involved risk management principles. On Monday, we talked about risk management. Thursday on both sessions, we talked about risk management. And today, I'm going to continue to be the cheerleader for good risk management principles. Protect your downside, and you won't lose sleep at night. So thanks for joining us this week. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.